From the morning reading, the S&P 500 is close to erasing its correction. After being down more than 10% year to date, the most widely benchmarked index in the world is only one good day away from putting pressure on fund managers to show positive returns. When it has erased a 10% correction in prior years, the S&P has actually tended to lose ground in the shorter term, as the buying pressure required to erase the correction was partially exhausted. The S&P 500 has tended to rise in the days before the Federal Reserve announces its decision on interest rates, and then fall in the days afterward, particularly over the last 2 years. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 8:07 p.m. on Monday night. Yes, that's right. I'm recording this on the evening before instead of the morning of, as usual, due to conflicts I'll have with my desk time tomorrow morning. I'm also recording this in preparation for the market day of March the 15th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and dive in. And while we'll go to the morning report, obviously I'm not going to report anything on overnight. That's why that's blacked out. Doesn't mean anything at this time of night. Asia has not even gotten going in a big way yet. I did want to comment, though, in terms of macroeconomic reports. For Tuesday, we do have in the United States core retail sales, PPI, and their related reports. Also, Empire State Manufacturing Index. So be aware of that. On Wednesday, in terms of looking ahead, we have in the United States building permits, CPI, core CPI, housing starts, capacity utilization, industrial production, and then later in the day, crude oil inventories and FOMC economic projections along with their statement and the Fed funds rate. Followed all that by a press conference. So as you can see, there is a slew of stuff that is coming in the next 2 trading days, especially on Wednesday. So market has plenty of stimulus to be moving it around in the next couple days. In terms of current volatility conditions, short-term VIX relatively low, still below 16, skew a bit elevated. We've climbed up above the warning threshold, so this is definitely starting to come into play. IV percentile on the S&P's down below a 20, the Russell's a 22, the NASDAQ a 22, and the Dow also below a 20 at a 17. We did have standard deviation moves put in today. You know what? I didn't capture today. Actually, there were no standard deviation moves put in for the trading session today. These are actually the numbers for day -1, so they should be down a level. So I've got to capture that. So let's go ahead and go to the charts. And here's the S&P, and you note the classic day of indecision after the big up move. So often you see this big move followed by a doji. So indecision, not sure whether we're going to go up or down. Obviously, we're also probably taking into account that anything that you do in the day today or tomorrow is likely going to have to take into account that you have this Fed decision that's looming in the short term. And not a lot of people want to get too much in front of an important decision like that. Let's take a look at the Dow. Dow, very much the same thing. Probably call that a spinning top. And also a candlestick pattern with indecision as its hallmark. The Russell stuck up against resistance. So nothing happening there. And then the NASDAQ closed back up underneath that cloud after a poke above the cloud, closed back below the cloud. So nothing really to get too excited about on any of these indices today. Volatility basically falling So nothing alarming there for sure. And then bonds. Bonds also was pretty much an inside day. We probably would call that a spinning top there. And then so far action today, nothing much to get excited about. Now gold did have a big move today. And I'm sure there were some very, very disappointed people in gold today. This candle right here would be the Monday. This is actually Tuesday that's live. Tuesday night, you see it continuing to break down. So the fact that it went through all this support that was in this area and closed definitively below all this is really going to unwind much of the work that had been accomplished in recent trading sessions with gold. So we'll have to watch that with some interest. In terms of the daily report, let's go on to there. Intermediate term phase opinion, still phase 4, very bullish pattern. Price patterns near horizontal resistance. Market timing signals. First one confirmed uptrend by IBD. Accumulation distribution score at a D+, the S&P at a C-. GMI index remains at a 5 out of 6 at the time of this publishing. And then stock charts decision point, also no changes there. So no changes in any of these mechanical signals after the close on Monday. This consensus would be market in transition with an increasing bias to the bull side. Position sizing opinions both at 100%, no change there. Intermediate term market posture, all four still very strongly bullish with weak bullish sentiment line reinforcing. So while we had mostly dojis here, we didn't see an awful lot of change there as well. In terms of hedge warning status, still level 0+, normal with some elevated risk conditions. And I have to admit that other than the technical chart conditions, there's not much in terms of our report that's showing elevated risk conditions at this point. In terms of position size, not position sizing, special opinions, option income strategy, the VIX is inside the acceptable window to initiate new positions, even for novice traders. Pretty much a green light to go with respect to that strategy. Cover call strategies and put selling both also no change from the Monday report. We've also become a little bit more aggressive in our stances here, going to a 1-to-1 ratio of in the money, out of the money. Also a 1-to-1 ratio of low beta and high beta positions in the construction of your cover call portfolio. And as you see here in the special warnings down below, there's not any red there at all. Really nothing to get too excited about. Skew actually was up over 130, so about a 10% probability of a 2 standard deviation move in the next 30 days. You see also here the new highs, new lows, 1 month with the New York Stock Exchange, well up over 300, so bullish sign there. Also bullish signs coming in with the key intermarket risk aversion indicators. They're all still flagged as risk on. Really about the only thing that's negative down here is the sentiment indicators are somewhat extreme, certainly not super extreme at 7s for the stock short term and gold as well. In terms of some of the key ETFs that are very high sentiment levels, you have these right here. And here you're looking for reversal patterns. Just because they're extreme does not mean that they are about to turn. In our fear and greed index contribution to the report, you see the composite of the 7 different sentiment indicators that is by this author rolled up to the fear and greed index score of a 73, dropped just a couple points during today's action. No change for the sector-specific metrics with respect to market posture on our key sector watch. Very nice blend here at this point between high beta and low beta, though an awful lot of the 52-week highs from last week we continue to note were coming from more defensive sectors. In terms of other sector-specific, pretty much a sea of green in the short to intermediate term long. No, I don't believe there's any changes here from the reports for today. And you see financial and energy and healthcare were also the winners in terms of percent change. I'm a little concerned This, I thought I pasted the new one on here, but these frankly look like yesterday. So probably need to ignore this percent change report for today. I do believe that this market posture for the sectors is fine. So just a couple things there that got missed somehow as I updated this report for today. So that's enough for that, and let's go ahead and wrap this up. We'll have a short report with this evening version of our normal market preview. One thing I will note, since we've got a little bit of time, if you haven't signed up for emails direct from me, you can do that by going to this website, scroll down just a little bit, hit that button, and when you hit the button, that'll take your name and your email address from you, and that will also allow you to get a copy of the ebook Portfolio Strategy. What you get by being on the email distribution list is a limited number of emails, mostly about alerts when the hedge risk level changes, mostly about increases is when we mostly are concerned, and then also periodic blog articles and other items of interest that I put out. In terms of smartphone users, you can certainly get to the very same by texting Falcon Global, all one word, to 22828. I will also mention, for those of you who would like to subscribe to the YouTube channel, that gives you a heads up when content has been posted, and sometimes it's just a little bit earlier in the morning and you get a little head start on your day, and sometimes it's like tonight and you actually get it the evening before, so something to consider there. Twitter followers, StockTwit followers, if you'll retweet, push that out to your followers, that is also very much appreciated. And we'll just kind of scroll through the rest of this. If you see something you like, just hit the pause button. And disclaimers, as always, hit the pause button if you need more time to review this. And then also note, there is a hyperlink down here at the bottom for the full set of disclosures. We'll see you back here for the Wednesday version of this production. And I'm not sure if I'm going to be doing that Tuesday night or Wednesday morning, but either way, that'll be the next installment. And good trading to all in the meantime.